The August 24th, 2011 meeting of the Ways and Means Committee will now come to order. Will the clerk please call the roll?
Ms. Andrews? Mr. Barker? Here. Chairman Daniele is excused. Mr. Esposito? Here. Mr. Haney?
You.
Mr. Hyder? Here. Mr. McCann? Here. Mr. O'Brien? Here. Mr. Quattro? Here. Mr. Tucciarello? Here. Mr. Yolovich?
Here.
And President Adair?
Here. Okay. Are there any speakers signed up for the public forum?
There are not.
Is there anyone here that would like to speak that is not signed up? Seeing none, pursuant to local law number 3 of 2009, the county independent auditors are here to review their report. I would like to introduce Scott Adair, the county financial officer, who will introduce the auditors.
Thank you, Mr. Chairman. It is with great honor that I am pleased to present to you this evening the audit partner, Ken Dion, and the senior manager on the county audit, Barb Loveland, to give their presentation regarding the discharging of responsibilities for the audit of the 2010 county financial statements. And they will have a brief presentation and take questions following.
Welcome, guys.
Good evening. Again, for the record, my name is Ken Dion. I am the engagement partner on the audit of the county's financial statements for 2010, and with me to my right here is Barb Loveland. Barb is the senior manager who served on the audit of Monroe County this year. Now, in our brief presentation today, I'm going to cover a few areas. I want to talk a little bit about what our responsibilities are under professional standards that we follow, AICPA standards. I wanted to go through what the status of the audit is or was, talk a little bit about some of the significant accounting policies, and really kind of go through all our, what we refer to as our required communications to those in charge with governance of the county. So I guess to begin with, our responsibilities are really to plan and perform the audit of the financial statements, which are prepared and are really the representation of management. We try to obtain, we obtain reasonable but not absolute assurance that the financial statements are free of material error. And what I mean by reasonable assurance, I can't give you absolute. The only way I could do that is if I audited every transaction at the county, and we literally would have to be here year round, and we don't do that. We use our auditor's judgment. We use sampling techniques and audit procedures to, again, obtain reasonable assurance. You know, we consider internal control in really designing our audit procedures and performing the audit. We don't render an opinion on internal control as one would do if we were auditing a public company, but we do spend a lot of time focused on internal control. Really, that's what I refer to as the platform of how we do our audit. We have strong controls. We do less substantive audit procedures. If you have weak controls, we would have to expand those audit procedures. From the county perspective, they have very good controls, very strong controls. We did not identify any material weaknesses or significant deficiencies in internal control, and in fact will not be issuing a management letter as part of the audit this year. Another responsibility we have is really to, in the context of the financial statements, is really to assess the accounting principles used by management, and we review management's estimates and judgments which are embedded within the financial statements. I'm here to report to the committee that those estimates are reasonable and they are in accordance with generally accepted accounting principles. Now, with the status of the audit, we did finish the financial statement audit. We did issue the CAFRA opinion. We issued a clean opinion or an unqualified opinion, which is the highest or best opinion you can receive, which is consistent with prior years. We are in the process of wrapping up the federal compliance audit, the A133 audit, and we will be issuing that report before the required federal deadline of September 30th. I'm here to report to the committee that we have not identified any deficiencies or compliance findings as relates to the single audit. With that, I a couple things I do want to mention also is that in performing the audit, we did receive full cooperation of the county management, and we had no real issues there at all. And I also wanted to also mention and confirm to the committee that we are independent of the county as it relates to the financial statement audit, and we did not perform any additional services to the county this year. So with that, that's my very brief presentation, and I will turn it over to the committee for any questions that you might have.
I'm going to allow some questioning tonight, but I want to be very clear that the questions must pertain to what the auditors were responsible for. I will not hesitate to shut the questioning down if we go on a fishing expedition here. So it's open for questions. Legislator Haney.
Thank you, Mr. Chairman. Through you, I notice in your opinion you appropriately lay out the size of the portion of county government that you don't audit.
Correct.
What is the nature of the relationship between you and the firm that is auditing? Are you totally relying on their reports?
Yes.
Or do you review their work or anything?
No, we totally rely on their report. We do not take responsibility for their audit. That's why they are mentioned in our auditor's report.
Right. I read recently in, and I can't remember which issue it was, of the State Journal, that the auditing gods are considering some kind of a change in this regard, regarding reliance by auditors on other auditors. Well, are you familiar with that?
Well, I don't,
and if so, will that impact?
well, that's always an issue that we deal with within the profession. The question always is, if you're the primary or principal auditor, as we are of the county, what do you have to do in order to gain some sort of comfort or reliance on the work of the other auditor? That's always been an issue, and we do follow professional standards, and we choose not to. We choose to rely on the work of the other auditor. And we do not take any responsibility at all for their audit. If we did take responsibility, we would be we essentially would not mention that the other auditor in our report. And if the rules change, we will obviously have to, follow the changes.
Do you expect that those rules are going to change?
Not that no, I don't expect they will be changing.
On page 36 of the CAFR, in footnote 1, where it talks about the component units and what's in and what's not in. It says, for example, that the M3S LDC is included, because it didn't have much activity last year, is included as a discretely presented component unit due to the county's ability to impose will on the M3S. My question is, if the county's level of control over M3S is such that M3S gets included in these financial statements, the county has other entities like Upstate Communications and Monroe New Power, which basically the county's relationship is the same. I'm wondering, why is M3S in, but the other two, but Monroe New Power and Upstate Communications are not included?
I don't know. Scott?
Certainly, that's really one of those decisions that we go through on a yearly basis of analyzing each of the different units that has an affiliation with the county to determine what the appropriate presentation is from a financial statement perspective. Those entities have either considered to be, that you had mentioned, are either considered to be joint ventures or related organizations and are included in a footnote disclosure. We felt because of the relationship between the county and the Public Safety LDC, or M3S, we felt as though it was necessary to include, because of the type of service that it was providing to the county government, that it should be included as a discretely presented component unit this year.
Well, what differentiates M3S from Upstate Communications, for example? And the county executive appoints the board of each. The county government couldn't function without Upstate Communications. That's all of our computers and everything. What's the difference between them?
I think the difference that from our perspective when we did our analysis of it was the type of service that it was providing, in that Upstate Telecommunications, the service that they're providing, is something that is a very broad range in spectrum and could be provided by a number of other outside entities. Where the Public Safety LDC is much more of an entity that provides a service that historically has been solely a government responsibility at that point in time.
But isn't control the measure?
It's not, and I think we've been down, I think we've had a conversation similar to this before. There's a multiple step progression that you need to go through to determine what the reporting requirements are for a particular entity. And that's the process or the analysis that we go through on a yearly basis to determine that for each of these organizations.
Through the chair, is that a line of reasoning that you folks concur with, I assume?
Yes,
okay.
Absolutely.
Paul, excuse me, we don't have to go through the chair for the questioning of these.
Oh, okay. There's reference made in the management's discussion of the American Reinvestment and Recovery Act funding, but the actual amount recorded in each of the 2 years, at least I couldn't see that it's actually disclosed any place. It's included in other numbers. Do either of you know what the actual amount of the ERA funding was in 09 and 10?
Through the chair, we can get that information to you.
Thank you.
Let's stick to the audit.
I thought I was. I'm reading the audit here. On page 37, we talk about I guess I'm confused in the accounting principle whereby by deferring the pension cost, the $6 million of pension costs, it did not have to be recorded as an expense. And I guess I'm confused about the accounting principle that allows us, by not paying a bill, to not record it. What?
Through the chair, I think, I'm not 100% sure that that's the correct page reference,
Yeah,
but
I'm trying to find
regarding the $6 million that's not recorded, regarding the pension stuff, I believe that based on GASB interpretation number 6, allows for the requirement in the general fund that liability would not be recognized in the current year. It would be recognized in subsequent years' financial statements. So it's a timing issue on the payment regarding that particular liability as to whether or not it gets recognized in the general fund. It is fully recognized at the government-wide level statements, but not for the general fund, just like other liabilities would not.
It's recognized on the accrual basis in the governmental wide, while the modified accrual would not be recognized.
Okay. When does it get recognized in the general fund? Only when we make an installment payment, is that?
Through the chair, that would be correct, yes.
In my last, I think it's my last question. On page 23, there's this. My question has to do with the amount of sales tax revenue that is reported. I can't, yeah, on page 23. Sales tax is reported as, and there's some other taxes in here, but I'm assuming that almost all of it, or the great bulk, is sales tax, is recorded as $404 million of revenue. We budgeted last year something like 83 million. Now, I assume the difference is that the 404 is the gross collections, whereas the 82 is the net revenue to the county. But I guess my question is, should our budgeting match what we have, the way we have to I assume it's been determined that we have to present the sales tax gross and then show the distributions.
Correct.
To everybody that gets
Correct.
it as an expense.
Correct.
Should our budgeting be matching our fiscal reporting?
You budget on a cash basis?
Through the chair, that's correct, yes. So our budget does not, in this particular instance, GASB 33 requires the recognition of the gross receipts of sales tax revenue, and the expense is also shown in the general government, if I'm remembering correctly. In the general government line is where the expenditure to our sharing partners goes to. It does not, as you well know, GASB does not have jurisdiction over a budgeting practice for local, state, and local governments.
Okay. And final question, are there any fiscal issues here? And I don't mean internal control type things, but I mean, are these financial statements telling us anything that I mean, this committee is charged with the fiscal welfare of the county, quite frankly. Are these financial statements, are there messages here that we ought to be aware of?
I would say no. There aren't messages within the financial statements that you should be aware of, or any red flags out there. I would say that these financial statements are, I call, GAAP basis financial statements, which may or may not necessarily parallel what you do in terms of operating the government. These are GAAP basis financials, generally said at accounting accrual basis, modified accrual basis, and as Scott pointed out, they're really not budgetary basis financials. If you reported on a budgetary basis, your results may be different, would be different, because of the timing and how you recognize certain revenues, expenditures, liabilities, and assets. But on a GAAP basis, there's no messages in here that I can see that you should be, that would, you should be, aware of.
A couple of years ago, I asked, because there's really two different accounting methods presented here. One is...
Actually, there's three.
Three?
Yeah. You've got in the back, unaudited, you have budgetary information, which is budgetary basis. Then you have modified accrual basis, which is the fund financial statements.
Right.
Then you have the government-wide, which is the, GASB's attempt at, being more like a full accrual.
I asked, and it admittedly gets confusing to a lot of people because of these different versions.
Sure.
I asked the question a couple of years ago as to which set of the financial statements is the more important. And the answer I received, and I don't recall whether it was you or someone else, was that it's the full accrual statements that are the most important.
It wasn't me.
It wasn't you?
No. I would say that, again, from an accountant, I think all three sets of, call it financial statements, are equally important, because government-wide level, it shows, it really presents everything that's affecting the county. liabilities that will be paid or funded in the future, pension obligations, OPEB, some of your long-term debt, things like that. That's very, very important information, obviously, for the county to have. And then I also think that from just a pure governmental operations perspective, I think the fund financial statements are very, very important because it displays the general fund, which is the main fund that you really, where all your operations really run through, and then what I refer to as really your restricted funds, like, you know, revenue sharing and capital projects and debt service. Those are all equally important because that tells you what really, what you have currently in cash, what you're going to receive within the next 60 or 90 days, and what liabilities you owe in the current period. So I think they're all equally important.
The problem for the citizen is that it's sort of like you pay your money and take your choice. I've had citizens tell me, what is the answer? And I say, well, tell me what basis you want the answer on.
Right.
I mean,
I also think you have to look at what the rating agencies focus on. And when these statements, when GASB 34 was first implemented back in 2003, the rating agencies tended to focus specifically on the fact that do you have, after you pay out all your expenses, with all the cash you've received, are you going to have enough money to pay your debt service? I mean, that's really what they were focused on. That's changed, I think, as they've gotten more and more used to, you know, these financial statements, and really the focus still is on that, but they also look at, you know, your liabilities that you have out there that you're going to have to fund in the future. So they're really focused on. I really believe they're focused on all the accrual basis and modified accrual basis numbers or amounts.
okay. Thank you very much.
Sure.
Are there any further questions? Hearing none, thank you, ladies and gentlemen.
Thank you.
Appreciate it.
Thank you.
Very informative. The next item on the agenda is approval of minutes. The minutes from the July 27th, 2011 meeting of the not Agenda Charter Committee, Ways and Means Committee are in your folder, and they will stand approved unless the clerk is notified of any changes by the end of the day. Next item is new business. Madam Clerk.
Referral 11-198.
Moved by Legislator Barker, seconded by Legislator McCann. Is there any discussion? Legislator Haney.
Through you, Mr. Chairman, are we recovering our full costs of this? It's an amount not to exceed 10,000. Will we be recovering our full cost?
Through the chair, Lieutenant Padalalo with the Sheriff's Office, yes, we will.
Thank you.
Is there any further discussion? All those in favor signify by saying aye. Opposed? Motion carries.
Referral 11-199.
Moved by Legislator McCann, seconded by Legislator Quattro. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. Opposed? Motion carries.
Referral 11-200. Acceptance of.
Moved by Legislator Quattro, seconded by Legislator Tucciarello. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. All those opposed? Motion carries.
Referral 11-201. Acceptance
Moved
of.
by Legislator Tucciarello, seconded by President Adair. Is there any discussion? Legislator Haney.
Thank you, Mr. Chairman. Through you, the amount we're receiving is $308,000, and the contract with the Catholic Family Center is $213,000. What's the other $95,000 being used for?
Through the chair, Bob Burns with probation. The $94,000 or so is used to pay salary, benefits, training, and travel for the actual reentry coordinator. That's a county position within the Office of Probation and Community Corrections.
Okay. This effort, I mean, it's really exciting with what it's trying to do. Do we have any data yet on accomplishments? I know I've asked that the 2 prior years, and we weren't far enough into the program to have reliable data. Do we have any data yet on whether recidivism is lower in the people that are in the program than those who aren't in the program?
Through the chair, this, like many of our programs, is actually a statewide reentry effort. Researchers with DCJS and some other entities are still looking at the first 6 years of results. We started with 8 or 9 counties, and they're up to about 20 counties who now do reentry services. There has not been any annual report coming from Albany. They're working on something, as apparently we reported the last couple of years. Locally, we clearly see improvement in recidivism rates from those rates that existed of returning offenders just 6 years ago. And programs that we do in Monroe County, whether they're strictly law enforcement or are more in the helping mode as reentry is, we feel that they all contribute to this lower crime rate that we're experiencing in Monroe County. So the impact program that was just passed by this body and the reentry program helping returning offenders, they all contribute to this lower crime rate in Monroe County.
So, through the chair, your personal experience and observation is that the program is definitely having a positive impact, but we aren't able to quantify that. Is that, I don't want to put words in your mouth, but.
Through the chair, from our personal experience, and I chair the task force that continues to look at stats and look at program, we know that this is the smart approach, that if we do not plan for the return of offenders to our community, we know that at a rate of 50, 60, or 70%, they will pick a new victim and they'll return to the New York State prison system shortly after their return here. We're working with anywhere from 10 to 15% recidivism rates now with the people that we're working with. So we're convinced that it's working.
So the people you're working with, your recidivism rate is only 10 to 15%?
Through the chair, that's correct. We have different definitions of recidivism, and the state will choose its definitions. Some relate to technical violations of parole, where someone misses a curfew or someone misses an appointment and they go back into the system. The lower recidivism rate we talk about is where there's no new crime victim, where there's no new arrest, no new offense in Monroe County.
But it's comparable to the traditional 60% rate, right?
Through the chair, that's correct.
That's a remarkable accomplishment. Thank you, Mr. Chairman.
Any further discussion? All those in favor, please signify by saying aye. Opposed? Motion carries.
Referral 11-202, authorizing.
Moved by President Adair, seconded by Legislator Barker. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. Opposed? Motion carries.
Referral 11-203, acceptance. of
Moved by
referral.
Legislator Barker, seconded by Legislator McCann. Is there any discussion? Legislator Haney.
Through you, Mr. Chairman, there's a $217,000 difference between what we're receiving and what we're paying out to the university and these two individuals. What is that money being used for? The money that isn't being paid out?
Through the chair, it funds existing county positions, a portion of 3 different positions, some supplies and travel associated with training.
What the 2 individuals, Margaret Pete and Linda Kozelski, what will they be doing for the county?
Through the chair, they will be updating 2 specific major plans that we have as part of this grant deliverable. Margaret Pete, there is a pandemic influenza planning and consulting.
Is what?
Margaret Pete will be updating the pandemic flu plan, which helps coordinate all the across all the municipalities and pod setups, point of dispensing units. So that's one of the major deliverables is how we would respond to a pandemic flu outbreak. And then Linda Kozelski is going to be maintaining and updating our strategic national stockpile plan. And Monroe County houses the New York State stockpile for a portion of New York State, and we also have a county stockpile in the event of an emergency.
Stockpile of what?
Public health preparedness items such as personal protective equipment and pharmaceuticals.
What is the experience, what's the expertise of these two people to be doing these things?
That's asked through the chair, right?
Through the chair,
That's what I
yes.
thought.
Both of these individuals, we did RFQ for both of these contracts, and as well, both of them have worked in our program in the past.
Any further discussion? All those in favor, please signify by saying aye. Opposed? Motion carries.
Referral 11-204, acceptance of a grant.
Moved by legislator McCann, seconded by legislator Quattro. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. Opposed? Motion carries.
Referral 11-205, authorize a contract.
Moved by legislator Quattro, seconded by legislator Tucciarello. Is there any discussion? Hearing none. All those in favor, please signify by saying aye. Opposed? Motion carries.
Referral 11-206, authorization.
Moved by legislator Tucciarello, seconded by President Adair. Is there any discussion? All those in favor, please signify by saying aye. Opposed? Motion carries.
Referral 11-207, authorization to advertise.
Moved by President Adair, seconded by legislator Barker. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. Any opposed? Motion carries. Are there any other matters to come before this committee? There being no further business, the August, excuse me, I didn't see it, Paul. I apologize.
Through you, Mr. Chairman, I'd like to ask Mr. Adair when we'll receive the second quarter key indicator report.
Through the chair, we're presently working on it and would anticipate sometime probably by the middle part of next week.
Thank you.
There being no further business, the August 24th, 2011 meeting of the Ways and Means Committee stands adjourned. The next meeting of the Ways and Means Committee is scheduled for September 28th, 2011.